Hello, this is Mark from tradingforum.com and welcome to this video on a simple, profitable Heikin Ashi trading strategy. Now before I look at the trading strategy, I'm going to look at a chart showing Heikin Ashi candles, and I've used the S&P 500 and I'm looking at quite a large time frame. I'm looking at the monthly time frame. Now at first glance, if you look at these, you might just assume that they are normal candles. In fact, they are actually quite similar, but they use a calculated version for particularly the open and the close, and this can affect the high and the low. So although they look very similar, and in fact are quite similar, you can see one of the key differences is that when we have a nice uptrend here, we have very little wick or shadow below the candles, and that persists here in the nice uptrend we've got here. And when we have a strong downtrend, we see the opposite effect. We see very little wick or shadow above the candles. The reason for this is because the Heikin Ashi candles are designed to be slightly lagging compared to normal candlesticks, but the effect of this is that they can pick up and hold on to a trend in a very clear way. If you look back at these charts, and they encourage us as traders and investors to stick with the key trends on the time frame that you're trading. So this is really the key advantage of using the Heikin Ashi candles, that you can keep with this trend, follow this trend, and take as much profit as possible from each position. The strategy that I'm going to look at today, I'm not using a monthly time frame. In fact, I've gone right back down to quite a small time frame. I would say Heikin Ashi will work better on the longer time frames. It's probably not going to work very well on a 15-minute chart, but once we're getting into the slightly longer time frames, we can take advantage of the tendency historically of many markets to find a trend and follow it for a period of time. The components for this strategy, it is a simple system. I'm just going to use the Heikin Ashi candles. I'm going to use a filter that is just two moving averages or the MACD. And I'm going to use the ATR, which is not part of the strategy per se, but I'm going to use it for the stop loss and profit target. The strategy itself couldn't be more simple. We trade long when the Heikin Ashi turns positive, and we trade short when it turns negative. We close our positions when the opposite occurs. I'm going to show this in the spreadsheet form. Now the spreadsheet I'm using here is a long-short backtest model that you can use to test any strategy that you can program into Excel. And Excel is a very simple way for most people to program and test different trading strategies. A version of this spreadsheet is available. There is a link on the screen from my website to my website, and click on the link if you would like more information about this. I should also say that the Heikin Ashi is one of the indicators that will be featuring in my new ebook that will be available in the Amazon Kindle store, and there will be a link once this ebook is available. The new ebook, for those of you who have looked at my previous ebooks, the new one is looking at slightly more unusual trading and technical indicators, of which Heikin Ashi is a good one in my opinion. Okay, so the spreadsheet is really pretty simple. I put in the MACD here. We're just using two exponential moving averages. I've got the ATR here next to it, and I've got the open, high, low, close data for the Heikin Ashi candles. On here I've got the results page, and you can see that over a period of time, this is quite a long period of time, this is from 2000 and going all the way through to 2014, towards the end of 2014, where we are now. And you can see on the left here the inputs that I've used for the strategy, and on the right a table of results and a chart showing the capital as it changes over time. One of the things, or a couple of things that I'd like to point out here. Firstly, I am using a profit target and I am using a stop loss, but they're both pretty long. In fact, the stop loss of 10 times the average true range, I don't think it will be taken out at all, because the Heikin-Ashi would change direction long before that and enter a trade in the opposite direction. Whereas there is times when our profit target is hit. This can obviously be adjusted to look for even bigger trades or shorter trades as appropriate. One of the changes that we can do, and I can do it now, I can enter a version of the trailing stop. You don't have to use this. I tend to use it for trend following strategies, because it locks in more of a profit and makes it generally easier to trade by avoiding losing too much of a profitable position. You can see there that adding in a trailing stop multiplier, adding in a trailing stop can tend to increase the amount of profit gained over time. The other thing I'd like to say is that I'm using a time start. This is obviously optional, but when you're using time frames lower than the daily time frame, there are certain periods, especially trading the Forex market, which is 24 hours a day during the week, there are certain periods that are more likely to involve breakout and a strong change of direction and momentum. And so I'm keeping it to the two key time periods. The 2 4-hour time periods are basically the European Open and the US Open. So this is during the day of the European markets. I've also put in a summer break, so a lot of traders, investors, people involved in the financial markets tend to ease off in July, and many of them will completely take off or wind down their positions and trading size during August. So we can take these months out, and that's what I have done here using my summer break of July and August. Obviously this doesn't hold true for all markets. You can change this to suit the particular market that you're interested in. Looking at the results, we've got a pretty good win percentage over time. We've got a nice difference between the largest winning trade and the largest losing trade. And one thing I like in particular is we've got a very low drawdown over this extended period of time, 14 years. Only having a 10% drawdown is pretty nice. Okay, so there you have it, a simple Heikin-Ashi trading system. There's not really a lot that has gone into this. It can be refined, it can be improved, but as it is a nice simple strategy to begin with. As I mentioned earlier in the video, the spreadsheet that I've used here is available. There is a link on the screen. Also, this indicator will feature in my forthcoming ebook about slightly more unusual and not so common technical indicators. For more information about trading the financial markets using Excel to backtest and about the financial markets in general, please go to www.tradeinformed.com.